Welcome to the Techno Fundamental Report for Christmas Eve, December 24th. Successful investing requires the discipline to do nothing when nothing should be done, and the courage to act when the evidence changes. You know, we talked last week about the possibility of difficulty with the technology stocks, which is somewhat still continuing. What we're really, I believe, going through is just nothing more than the market starting to broaden out and we're seeing some rotation. But like Howard Marks says here, never predict the market. Markets reward clarity of thought and punish clarity of emotion. So let's just look at the facts. Now, one thing that Jesse Livermore talks about is something called the washing machine market, where there's just no trend. It's where the market basically goes sideways for an extended period of time. It's like you're in no man's land. So what happens in this churning process is that you get rotation. It's where the leaders of the last bull market start to break down. Doesn't mean they're going to go to zero. Doesn't mean they're going to drop dramatically. It just means they're going to go probably into a consolidation phase and begin somewhat of an underperformance stage. So the failure to lead is a warning. So what Livermore is saying is that, this is a warning. It's not saying that we're going to go into some bear market or that the bubble is popping. It's just something to be aware with. So always go with the trend. Stay away from junk. Look for pivotal points, which we'll talk about here. And never average losses down. If you take a position in a stock and it just isn't working and it goes down, leave it alone. Either sell it, just don't buy anymore. So look for the pivot point. Jesse Livermore's pivot point is very simple. You look for a proper base structure. A period of time where the buyers and sellers are somewhat in parity. Now this is a very volatile situation here, but you can see it starts to tighten up. And then the buyers and sellers continue in parity. You have buyers come in, sellers come in, sellers come in, and so forth. But when it finally breaks out above that pivot point, which is this area, the buyers have taken control. So hopefully that ends up in a long-term uptrend, which is the general idea. Now, what we've been seeing for the last, say, 3-4 years has been 7 stocks. They call them the Magnificent Seven, mainly technology. 7 stocks have been pretty much determining the direction and the amount of rise in the indexes because they're market cap weighted. These are big companies. This is what I call the $1 trillion club. So if we look at a comparison here of where I take a large cap ETF, which is a fund that's very heavy in Magnificent Seven, and I divide it by the S&P 500 equal weight, meaning that this is about 2% Magnificent Seven stocks, whereas this is about 75% Magnificent Seven. So you can see here for an extended, since 23, the Magnificent Seven have been broadly outperforming the Great 493. So you can see here that we're starting to see somewhat of a pullback. Is it temporary? It could be. But we're hoping that we're going to start to see the market begin to broaden out. And we're starting to see that. So this is a graph here of Bitcoin. Well, it's a Bitcoin trust called IBIT. And I just find it interesting how we can then take this fund, which is a growth fund, how the performance of Bitcoin kind of correlates to the performance of the NASDAQ. Now, I have a good friend that has told me that, there's studies out there that show this. I just can't understand why, but I think it has to do with risk on, risk off. Now, this is the equally weighted S&P. This is the regular S&P that's market cap weighted. You can see here that the performance of the market cap weighted index did break down below the 21-day, actually broke below the 50-day, whereas during the same time period, the equally weighted tend to kind of hold up a little better. Not dramatic, but very subtle change. So if rotation is going on, let's just kind of look at some of the names out there that we're seeing. Now, we do own some of these stocks, such as this stock, Axum Therapeutics. We do own this. This is biotechnology. You can see here breaking out to a new high, very healthy volume signature. Here we have pharmaceuticals. This is Madrigal Pharmaceuticals. You can see here breaking out, aggressive volume. Now this was last Friday, which was options expiration, kind of what we call dirty volume. But still, you're still getting a breakout in the stock price, and it's a pharmaceutical. Here's travel, which is Viking Holdings, cruise lines. You can see the pattern. Here we have steel, Allegheny Technologies, breaking out to a new high. Now we do own this stock. Now, as we look at, let's see here, here we are. As we look at the aggression index, which is where I take the NASDAQ, which is aggressive stocks, and divide it by defensive consumer staples. So you can see here that we peaked here back in early November, went into a correction. Hopefully this is the low end correction. We are getting somewhat of a double bottom in here. Broke this trend line so that we are seeing an improvement here in the growth stocks, but still early on, and we are seeing rotation into other areas like steel. Now let's just take a look at the indexes real quick here. We have the NASDAQ here. We got the top here back in late October, pulled back and made a low here late November, middle November. We've rallied, we've rolled over. Now we're starting to rally again. Hopefully this continues and we get the year-end Santa Claus rally. S&P 500, same story, actually eking out a new high today. The pattern is looking constructive. Keep an eye on it. Now, the primary trend continues to be up. We've never broken below the 200-day. So the long-term numbers look good. Long-term trend is fine. It's just as we go through this rotation, it's just making things a little difficult. However, interest rates appear to be very stable. This is the yield on the 5-year Treasury, moving basically sideways. We're still below zero on the power index. So we'll just have to see. But interest rates do look stable. So if you have any questions, please let me know. Thank you very much.